Let's jump right in. Hello and welcome, everyone. This is Financing Philadelphia's Future with Councilmember Derek Green, a live Q&A about creating a Philadelphia public bank. I think this is our 8th episode of this. Very exciting. You can find old episodes on the Philadelphia Public Banking website, so check that out. Thank you for joining us today. I'm your moderator, Vanessa Lowe. I co-chair the Power Economic Dignity Team. Power is the Philadelphians organized to witness, empower, and rebuild. I also host a radio show called Vanessa's Money Hour on radio. So again, it's a quick half hour. So what we want to do is give you some basics. We recommend that you use the speaker view on your Zoom interface. That way you'll see the person who's speaking as the main thing on your screen. We have our hosts, Peter Winslow and Kyra Harris, who are going to be capturing your questions. So please start submitting your questions now. And you can refer to the chat for any additional instructions. When you're submitting your questions, please submit your first name and your neighborhood. We want to know where people are writing to us from and who's curious out there about the Philadelphia Public Bank. And enter your email in the chat if you'd like to be added to the Philadelphia Public Banking Coalition's listserv to get more direct notices about these meetings and others. All right, let me go ahead and start with the introduction. So our regular and primary host of this is Councilmember Derek Green. He is serving his second term as City Council member at large. He has a background in banking and a deep commitment to sustainable economic development, particularly for Philly's Black and Brown neighborhoods. He chairs the committees on finance and disabilities. His top legislative priority is of a Philadelphia public bank. All right, and our guest today is Greg Heller. He is Senior Vice President for Community Investments at the Philadelphia Housing Development Corporation. He's also both the Executive Director of the Philadelphia Redevelopment Authority and the Executive Director of the newly created Philadelphia Accelerator Fund. All right, I'm going to turn it over to Councilmember Green to start with an update.
Well, thank you, Vanessa, for such a warm introduction. You do such a phenomenal job, as always, and it's hard to believe this is our 8th Financing Philadelphia's Future presentation on Facebook Live. I'm working with the Philadelphia Public Banking Coalition, and it's been a great opportunity to have these conversations on a monthly basis. Last month, a few weeks ago, September 18th, we had a phenomenal visioning summit, which we had a number of people from all around the country participate in a very action-packed and informative and engaging conversation on a great Saturday afternoon. And we want to continue the lively conversation discussion. So at our next Financing Philadelphia Future on Tuesday, October 26th at 4:30, we will not have our usual lineup. What we'll do is more of a Q&A to answer additional questions that may have come out from the summit and give an opportunity a deeper dive on some of those questions that people still may have. Although we try to answer questions as readily as possible, we want to provide the Tuesday, October 26th time at 4:30 to have some more in-depth conversation. But for today, I want to thank Greg Heller for joining with us. As Vanessa stated, he has various titles. But one title, which is very interesting, is the Accelerator Fund. And this is an initiative that Greg has started that has some differences, but also some kindred spirit to the work that we're doing regarding a Philadelphia public bank. So with that, Greg, if you could give us a little background on the Accelerator Fund, how it got started, and what are some of the goals for this new institution?
Sure, thanks, Councilman. So the Philadelphia Accelerator Fund came out of a few years ago. We were doing the city's first housing action plan, and we were listening to lots of people, developers, neighborhood citizens, community groups, CDCs. And what we heard time and time again was just that there were two big issues. One was that people who are trying to build affordable housing in Philadelphia's neighborhoods were having a hard time getting access to the kinds of flexible, affordable capital that they needed. And two was that we were hearing from primarily Black and Brown developers and other historically disadvantaged groups that they were having trouble accessing capital from conventional sources for a number of reasons that were pretty consistent across the board. So we launched the Philadelphia Accelerator Fund as an independent lending vehicle with the dual purpose of helping provide access to capital for historically disadvantaged developers, and also providing new flexible sources to finance affordable housing. And I'd be happy to go into more depth about how we're planning to do that and how we're planning to make sure that the capital access is truly equitable.
Yeah, and that's very similar to one aspect, various aspects of the public bank, especially when you're talking about affordable housing development and helping entrepreneurs, especially entrepreneurs of color. What was the seed funding for the Accelerator Fund in reference to capital? And also, what type of dollars did you start with in reference to the operating side of this new entity?
Yeah, so the source of capital is going to be debt that we borrow from private banks, but we are backstopping it with some public funds that we put into this. So we're not going to be lending out any of the public money. It's going to be solely used as a guarantee on the bank dollars. So 100% of the money that we're going to be lending out or potentially making equity investments is going to be private money from commercial banks. But we do have this public money sitting in escrow that we're going to be using as a loan loss reserve. And we also have some public funds that we're using to finance our first couple of years of operating costs until we get started and off the ground.
Okay. And then, from our conversations we've had in the past about the Accelerator Fund and the public bank concept, how do you see those two entities working collaboratively together?
Well, we did a bunch of research before we launched the Accelerator Fund, looking at other similar types of investment vehicles around the country. And what we found was that they were most successful when they had a source to guarantee the private funds. So for example, San Francisco has something called the San Francisco Housing Accelerator Fund. So obviously we've been copying some things shamelessly from San Francisco, including the name. But what San Francisco had, the same thing that we have, is they had some public money that they were able to use as a guarantee to be a loan loss reserve that helped them leverage all of the private debt that they got from commercial banks. And we're the same thing. We would not be able to get the private money from banks unless we had a way to guarantee that money. So from our standpoint, the Accelerator Fund, and I think I speak for most community development financial institutions, CDFIs, they need a source of loan loss reserve in order to be able to borrow capital. You can't borrow money without a source of collateral or guarantee behind it. And the same is true for developers. And this is a problem that we've been hearing across the board, especially from small developers, is that they go to a bank to get a loan and they don't have sufficient collateral to be able to borrow the money that they need. So that's something we're trying to overcome from the Accelerator Fund. We're trying to make sure that we can lend based on reduced collateral requirements, alternative collateral, or even do non-recourse lending. But what would be incredibly helpful, because Accelerator Fund's not going to solve everybody's problems. It's not the silver bullet. It's one tool in the toolkit. So beyond the Accelerator Fund, there's just this huge need for third-party guarantees for all kinds of community developers, small for-profit developers, CDFIs. There's just an across-the-board need for somebody to come in and provide letters of credit, third-party guarantees, and loan loss reserve. So I think that if the public bank were able to fill that role, that would be extremely powerful. And that would provide a way not just to leverage the resources of the public bank, because everything you use as a guarantee, you're going to get leverage on that tenfold, right? Like we saw in San Francisco, they were able to raise over $100 million of private debt off of $10 million loan loss reserve. And we think we're going to be able to do the same thing here. So you just have a huge leverage rate when you're providing guarantees. But two, especially for small developers, it allows them to build their own balance sheet, get their own loans. So In many ways, it unlocks the potential of developers to be able to get the money that they need to do their projects. And that's true for private developers and for nonprofit CDCs. So in any event, I just think that being able to provide guarantees, credit enhancement, letters of credit would just be an incredibly powerful source to multiply the public bank's impact tenfold and also empower developers across the city to be able to rebuild Philadelphia's neighborhoods.
I just have one more question before we open it up for other questions. I know that the Accelerator Fund is also going through a CDFI process or going through the process of becoming a community development financial institution. There's similar goals for the Public Bank Initiative to do the same thing. Can you give some perspective of the steps you are taking now in order to receive CDFI status?
Yeah, so for those on the call who might not be familiar, so CDFI status is a federal designation that comes from the Department of Treasury. And the most important thing that it lets you do is it means that any private bank who wants to invest money with you, that those banks will get CRA credit for the Community Reinvestment Act. So that provides an incentive for banks to lend to you, which you don't have it without the CDFI status. The other thing it lets you do is apply for fairly modest size grants from Treasury. But you can get a few $100,000 a year in grants that you can then use to build up your loan loss reserve, to fund your operating expenses, to do other activities with. So those are really the reasons to become a certified CDFI, are the incentive for banks to do CRA eligible lending and to get these grants. There are other programs too through CDFI Fund that are for larger CDFIs that have the capacity to manage them. And we have some of those in Philadelphia, like entities like the Reinvestment Fund. They participate in some of the larger CDFI programs. But those are the main reasons that we would do it for the Accelerator Fund.
Okay, we're ready for some outside questions. I'm going to turn to Peter and Kyra, but I'm going to ask the first question just for the clarification for folks who may be listening. Greg, we listed a lot of organizations you're involved with. Who is managing this Accelerator Fund? What's the status? Can people apply now, and how would they apply?
Sure. So the Accelerator Fund is an independent nonprofit. It's not part of the city. And you can read about it at phlfund.com. It has its own board of directors. And I'm just managing it in the short term. In the long term, we want this entity to stand on its own 2 feet and be operated totally independently from the city of Philadelphia. That said, there are some ex officio members on the board, so there's always going to be some relationship with the city through those ex officio members. And you can see who's on the board on the website, again, at phlfund.com.
Great, thank you. Peter, you're unmuted. Do you have a question for us?
Yes, I have a question from Stan Shapiro having to do with interest rates and the interest rates charged by commercial banks. Wondering 2 things. First, whether with those rates, whether the kinds of developers that we're talking about for affordable housing will still be able to make their projects work with prevailing market rates. And second, is there an opportunity with the bank doing some direct lending so that there could be some blended rates available to developers of affordable housing?
Was that to me or to
yes,
the council?
Greg, it's sort of to you.
It's me. Okay. All right. So interest rates right now are at historic lows, as most people are probably aware. So we do hope to continue to, whatever rates are, to be able to lend at slightly below market, but rates are very low right now. So I don't know that the Accelerator Fund is going to be that competitive based on rate alone. But there are other differentiators that we think are really important. So for example, the Accelerator Fund plans to underwrite projects primarily rather than borrowers. So if you're a developer with a limited track record, that's not important to us as it would be to a commercial bank. What's important to us is the project and the impact of the project. We're hoping to offer flexible products. So commercial banks typically have sort of a standard set of products that they offer, and we're hoping to be flexible in terms of what we're providing so that they work for different projects in different neighborhoods in more dynamic ways. We're not planning to have any minimum investment size. So even if you're doing, a single row house conversion, or if you're doing, say, a 5-story multifamily building, we want to be able to finance those projects. We don't want to be able to say your project's too small for us. We're going to be evaluating all loans with an impact score. So that means that we're going to be evaluating them based on how much good the project is doing. And we have a whole impact score developed that looks at everything from minority participation to the affordability of the units and the population that'll be served, providing communities with goods and services, opportunities for communities to have ownership and equity in projects. So we're really looking at the value of the project from a social standpoint as the way that we're going to evaluate loans. We're going to be using the income approach for appraisals. And I don't mean to get too deep in the weeds here, but in low-income neighborhoods, when you look at projects through a sales comp approach, it tends to bias against low-income neighborhoods. So we're trying to overcome that by using an income approach to appraisals. Like I said before, we're looking to reduce collateral requirements or have alternative forms of collateral or do non-recourse lending. We want to keep fees low. We want to lend at an above average loan to value ratio, again, to be able to make projects in low income neighborhoods work, allow early repayment without penalty. And importantly, we want to be able to provide technical assistance to developers. So if they need help putting together their project financials or navigating the permitting process, we want to have mentors and coaches who can help developers be able to do that. So, again, I think interest rate is important, but we think that there are a lot of other factors that we're going to be bringing to bear that are more important than just looking at interest rate alone.
Greg, you were talking about impact scoring and wondering if there's an opportunity for impact investors to be part of the Accelerator Fund, and whether for impact investors and the banks, once they put their money in, they have no decision-making over how that money gets used. Is that correct?
Yeah, that was the decision that we made. There are some funds where they do let their participating lenders or investors have a say in every project, which is a totally legitimate model. It's just not the one that we chose. So as you said, investors are not going to have a say in the selection of individual projects. We have our own credit committee, we have our own impact score, but we are going to be providing our investors with regular reporting on both the performance of the loans and also their social impact, so that people can see how much good we're doing, where the projects are, who we're helping and serving.
And will you take an equity position, or will it only be debt?
At this time, we've only had interest from folks in providing debt instruments, but if somebody came and was interested in equity, we'd be glad to talk about that and figure out a way to make that work. We just haven't had anybody come to us who was interested in investing that way.
All right, I'm going to go to Kyra next, but just since we're bringing up this issue of impact investors, so this is sometimes regular folks who are interested in doing impact investing, but there's a difference between an accredited investor, meaning they have to have $1 million, in assets or more, or a very high income, versus regular folks. So, or we'll say people who don't have that much. So what's the definition of, what's the minimum investment that you'll take, and does it need to be from a high income and high net worth investor?
Like I said, from the accelerator standpoint, if there are impact investors who are interested, I would say, please reach out to me and we can talk and figure out what makes sense. At this time, we don't.
I'm sorry. Kyra.
At this time, we don't have a good instrument or a good way of doing very small amount investing. Again, there are funds out there that crowdsource equity from, hundreds or thousands of individuals. We're not set up to do that at this point, just because of our internal capacity, but maybe down the line, that's something that we could set up to create a broader opportunity for individuals to make small investments and to be able to benefit from the upside of the fund.
All right, Kyra, do you have a question? We're already at 4:51.
Yes, there are quite a few now. From Connie at Germantown Life Enrichment Center, she explains that they have found it very difficult to use low-income tax credits to rehab their SRO residents because of bookkeeping and everything involved with that. So her question is, will a public bank be a lot easier to borrow from?
And I can jump in on that. And I'm, familiar with low-income housing tax credits. Those projects are very intensive in reference to the amount of requirements that are needed. I think from a public bank, once we have the ability to provide that type of credit, I think it would be easier. And also because we're looking at a public entity that doesn't have the same level of risk that other entities would have, I think it'll make an easier type of project. But I am familiar that the low-income housing tax credit projects do have a lot of oversight as well as record keeping. And often with those type of tax credit projects, the people that were involved in the beginning of the project when tax credit deal was done, many times, when that tax credit syndication ends, you don't have the same board members involved, because that may be 15 years later and you don't even have the same staff. So you're literally going through older files and notes and trying to figure out different dynamics. And for some organizations, there may be a right of redemption to actually take back that, but having all that information data can be challenging. And hopeful that, just like as Greg was talking about, the Accelerator Fund being helpful for small businesses and businesses of color in particular who are developers, I think the public bank could play that role in conjunction with the Accelerator Fund to help provide those credit enhancements, which is really lacking in the industry, based on what his data and the research they have done as well.
Great. Kyra, do you have another one?
Yeah, I just want to add in real quick to that. We do hope that Accelerator Fund, and like the councilman said, possibly in conjunction with the public bank, can help provide products for unsubsidized affordable housing. Because you're absolutely right, low-income housing tax credit projects have a lot of compliance and paperwork, and it's a complicated process. I would say, though, if you have an existing SRO building that you're looking to recapitalize and you don't want to go the tax credit route, you can still apply to the City of Philadelphia's annual round of preservation grants, which can be used to refinance projects that do not have tax credits. It's not for new construction, though. It's only for existing properties that you're looking to recapitalize. If you want more information on that, you can check out the Division of Housing and Community Development's website, or feel free to contact me.
And real quick, I did put in the chat feature the link for the Philadelphia Accelerator Fund, which Greg provided, which is phlfund.com.
Thanks for those links. Kyra, let me give you another chance. I have another question.
Yes, Susan had a question about how a public bank could possibly help to alleviate homelessness.
Well, that goes back to another conversation where collaboration with the Accelerator funds. As we all know, we have a significant amount of homelessness in the city of Philadelphia, and a lot of that's tied to the lack of affordable housing. And it's really difficult for affordable housing developers to be able to get access to credit. That's why the Accelerator Fund is so important, because it provides that kind of gap filler funding for them to do development, and also having an organization like the public bank that could help mitigate their risk when they try to get access to loans by providing that letter of credit or credit enhancement. So I think having an entity like the Accelerator Fund and working in collaboration with a public bank can make it easier for affordable housing developers to do more housing production, which is something that's incredibly needed here in the city of Philadelphia because the cost of housing has gone up in the city, especially over the last number of years. And for affordable housing developers, it's made it even more challenging to do development. And when you think about the cost of materials that happened as a result of the pandemic, the cost of steel, lumber, other type of housing goods have gone up dramatically, and housing developers have to pay for that additional cost. So anything we can do to make it easier for them to do development and create more units will help to address the homeless problem in Philadelphia.
It's already 4:58, but I guess I want to leave it to Councilmember Green. Do you want to mention, I think you've been working on getting a level set of funding for the Housing Trust Fund. Is that worth mentioning here?
That's very good. See, that's why you're the Oprah Winfrey of Facebook and Zoom. So that is actually accurate. On the general election on Tuesday, November 2nd. I have 2 ballot questions on the ballot. The one in particular is regarding the Housing Trust Fund. And it's a question for the voters in the city of Philadelphia to make sure that going forward, we dedicate half of 1% of our general fund budget to the Housing Trust Fund. And if the voters approve that on election day, Tuesday, November 2nd, then we'll have additional funding that we allocate every year for the Housing Trust Fund, in addition to the dollars that they receive by some of the recording fees and other dollars that come into the Housing Trust Fund. This will give them a stable source of funding beyond the other funding that can go up and down with the changes in the market. And it also will go to help address the issues of homelessness by providing more dollars for housing production for those who are in the disability community, because there's an even more drastic need for housing production, but those that have physical learning differences, and will help us to preserve housing in the city of Philadelphia, because as we know, Philadelphia has a very old, or as my father would say, seasoned housing stock. And it's important that we try to preserve as much housing as possible, so that way we prevent other people from becoming homeless.
All right, look for those ballot questions. It is time. This goes so quickly. Peter, do you have a final short question that you want to add in? We've got 2 minutes.
I have 2 quick clarification questions for Greg that can be sort of answered with yes or no. One is, will the Accelerator Fund be available for helping fix up homes, such as the nonprofit Urban Resource Development has? And the second is, will the interest reserve requirements be generally lower through the accelerator?
So for the first one, if it's a developer fixing up vacant homes that they're planning to sell or lease, absolutely. If you're talking about individual homeowners, we have a great program for that already called Restore, Repair, Renew, where people can get 10-year, 3% APR loans for doing home and property repairs. And I can put that link in the chat as well. On the second one, yes, we absolutely want to either not have to escrow interest reserves or have reduced interest reserves. We know that that's a big barrier for folks to get loans currently who don't have a ton of liquidity.
Thank you. Thank you. Another great conversation that goes way too quickly. Please join us on 10/26 for the Q&A with Councilmember Derek Green. I'll turn it over to the council member to say a quick goodbye.
I just want to say thank you, Vanessa, for always hosting us. Thank you to all of the leaders of the Philadelphia Public Bank Coalition for bringing this conversation together. I also want to thank Greg Keller for your leadership in getting the Accelerator Fund started. As you can tell from this conversation, just like with the Philadelphia Green Capital Corporation, another new initiative that can work in partnership with the public bank initiative that we're working on. I want to thank him for his time this afternoon.
Great afternoon.
Thanks so much for having me.
Thank you.